if I'm looking to invest in real estate and I don't live in an area that people want to live in, what do I do?
Well, why are you living there?
Well, I live there because it's cheap. Maybe it's because my family lives there.
Okay. Well, you don't have to invest directly where you live.
Mm-hmm.
You don't have to invest within 10 minutes of where you live. You can invest a little bit further. I get a similar question from people who live in New York and California, where you can't find anything in my neighborhood less than $1 million. How am I supposed to invest in real estate? And in my opinion, there's a lot of opportunity in real estate, and that requires research, and that requires you looking around. So you can look in areas where money is moving to without being in your neighborhood. Like if you look in the Midwest, not just Michigan, you can look in Michigan, Indiana, Illinois. There's a lot of states in the Midwest where you are seeing pockets and areas of population growth. And that's very easy to find. Just go onto Google and you can look at different states, look for population growth. And the advantage of places like the Midwest is property values are way less than you would see in the East or the West Coast.
Okay.
You're not going to see the same appreciation potential that you would see in some of the hotter areas because you're seeing massive amounts of people just moving into these areas. But in the Midwest, you see steady cash flow. And so you can invest in a property. This is very common. You can buy a property for under $150,000 and rent it out for $1,500 a month. And so how do you find that now? First, you got to look at where you want to buy. You got to look at the type of property you want. Maybe you want to buy a single family home. That is the easiest way to start because you need the least amount of capital, least amount of cash. You could look at apartment complexes. I love multifamily buildings. So you got to know what you want. You got to know where to buy. You can look at places like LoopNet if you want to find commercial buildings. If you want to find individual properties, once you find the area that you want to invest in, look for a realtor that is working with real estate investors in that area. You want to find a realtor that's specifically working with real estate investors, because if the realtor is only working with people who want to buy their first home or to buy their next home, they're not going to understand what is a good investment property and what's not. They're going to find you something that's way too expensive, that's not going to get you the best return. So you want to find somebody who works specifically on the real estate investing side.
Gotcha.
Then you want to start looking. You're going to have to go through properties. You're going to have to make some trips out there. It's more work, but now you can find the type of deals that you want. When I look for real estate, I'm looking for a 7% cash on cash return on my money, meaning for every $100,000 that I put in, I'm going to make $7,000 of positive cash flow after all expenses a year. So that's how you start finding the properties. If it's not where you are, you're going to have to look outside of your neighborhood. If you cannot afford the properties in your area, you're going to have to look outside. There are different types of opportunities in so many different places. And you can find deals under $100,000, which will produce steady cash flow, which have the potential for upside, but it's going to take more work. Now, the question is, how do you find where businesses are going? And it's really not that hard, because in real estate, there's no insider information like the stock market. In the stock market, if you get insider information, if someone tells you that there's going to be a merger happening, it's illegal for you to make a trade or an investment based off of that. But in real estate, if you find out that Walmart is opening up a store in a city and you make an investment based off of that, it's not illegal. It's actually completely legal. So what you can do is you can talk to different cities, go to the city hall, ask them, are there new businesses coming? What are some of the new developments coming in your area? What do you see happening in the next 3 years in your neighborhood or in your city? And these are the type of questions you can ask. This is how I found a lot of my investment properties, because I saw that there were cities with whole new businesses coming in. Oh, do you see this vacant land over here? Yeah, Walmart is going to develop that land and build up a Walmart. And if Walmart comes, they're also going to put in a whole new retail shopping plaza right in front of it. Oh, so you're talking about tens of millions of dollars coming in right here? Yes. Oh, so now you can go and look for properties in the area that you want to buy. Just like that, there's another city which I'm investing in now, which has unveiled that they want to make this massive tens of millions of dollar investment into developing a brand new downtown. There's some vacant buildings on this major street. They want to tear all these down and build a brand new downtown, make a walking downtown so people can walk there. And it's nothing like that right now. Now, this is not going to be fully visible for the next decade, but this creates opportunity for me to come in now and find properties that are cheaper, that need work. I can come in and renovate these properties, make it a better place to live, and capitalize on that upside because I'm doing that research beforehand. I'm putting in that work. And it's hard in the beginning because you've never done this before. If you've never invested in real estate before, this is all going to seem like a foreign language. How do I do that? But you just got to do it. You just got to start. You got to start talking to cities. You start talking to real estate agents. You start talking to people in the city itself, and you will start to learn because people like to be involved in their community. And when people are involved in their community and you start to get to know them, they will tell you what's going on and what's coming because people like to be involved in their community. Right. So you have to start getting involved and you have to start understanding what's going on. That way you can find the opportunities in your area.
And I want to ask too, kind of, you mentioned actually going out and seeing properties. What do you think about this kind of movement of crowdfunding and REITs kind of investing online in places that people haven't ever seen?
It's awesome. I think it's great. I invest some of my own money in Fundrise. It is a sponsored minority mindset. I'll put a link for them in the description. But crowdfunded real estate is awesome. And it's a way for you to now access real estate investments for very little capital. Now you can get exposure to real estate investing. You don't got to deal with tenants. You don't got to deal with trying to find the property. You don't got to deal with managing the property, doing the day-to-day work, finding the property management company. You put your money into a fund, which gives you exposure to real estate. Now, I prefer owning physical real estate. I like owning physical real estate because I like being the entrepreneur behind it. I like revitalizing properties. I like getting the tax breaks that you get from real estate. So I rather own physical properties, but I do have some money in that type of crowdfunded real estate. I think that's a great entry point for beginner investors who don't want to deal with the headache with real estate investing. And even if you're not necessarily a beginner, if you don't want to deal with the headache of real estate investing, it gives you exposure to real estate without all the headache of real estate.
Yeah, and I think at the touch of your fingertips nowadays, pretty much anybody can do it.
The internet has made investing much more accessible, but you need the right financial education because just because something's accessible doesn't mean it's easy. You have to take the action and you have to take the education first, and you have to be willing to do that. And if you're not, then you're going to lose your money. I mean, you have to understand that even with things like Fundrise, there's a chance that you can lose money. If you see a real estate crash, you can see the value of your assets go down. It's not liquid like the stock market. In the stock market, you can sell your investment in a second. With Fundrise, you can't. You have to own that fund for a number of years because now you're trying to get exposure to real estate. So it's the same concept. You can get paid with cash flow. You get your share of dividends and appreciation. You can get paid with these quarterly payments that you get, but you have to understand that you can't just sell it like you can the stock market. And so, if you see massive swings on the real estate market, you're also taking that risk, but you also get the upside if real estate prices go up and if rent goes up. So everything has risks. Like we talked about earlier, there's risks with everything. There's also risks with not doing anything, but you have to understand how to mitigate that risk.
Now, I want to ask you about startups because you were talking a lot about risk before, about, making some investments in the stock market. Some are risky, some aren't risky. A lot of people would think startups are super risky. Yeah. So as far as investing in those, what can you kind of tell people? What's kind of your experience with that?
It is very risky. Most startups will fail. And the advantage is you don't have to hit every successful startup to make money. Some startups will go very big, some will do nothing, and some will completely fail. So again, it is very risky.
Right.
Now, it has become much more accessible, just like everything else in the last few years, because of something called Regulation CF, Reg CF, which stands for Regulation Crowdfunding. So you can go to crowdfunding sites like Start Engine, WeFunder, Republic, which allow you to now invest in startups. So you can see startups, these are typically valued somewhere between $1 million and $50 million, the valuation of a company. And you can come in and invest your own capital, typically with as little as, I think, $100. You have to check the site. I think everyone's different. But around $100, you can go in and make your minimum investment into companies. Now, what you're doing is you are getting ownership in these companies. And the risk is now the company can go bankrupt. It can fail. It doesn't do anything. Very possible with a startup. High risk, high potential reward.
How do you mitigate that? Is there a way to mitigate investing in a startup?
Yeah, I mean, you have to do your research. You have to learn who is the founder, learn about them, look at their LinkedIn, see what they've done, watch their videos, see their interviews, see what type of person they are. How passionate are they about your product? Because if they're just one of those like high-paid CEOs that isn't really passionate about the product, well, that might not be a good thing. But if they're super passionate about changing the world and solving a problem, now that's a good sign. You can look at what the industry is. Is this an innovative industry, right? We're seeing a lot of innovation in fintech. We're seeing innovation in the genome technology. We're seeing innovation in a lot of fields. If it has that sort of innovation, then that's another opportunity for you. But you have to make sure that it's a good product. Is the product something that you would own? The cool thing is sometimes you'll see products that you're buying all the time, food or subscription services that you're paying for already, then now you could just be an owner in the company. And if you're using it and you love the product, then chances are other people do too. So that can be an opportunity for you to come in and buy.
But it doesn't really work like that. There's a lot more to becoming wealthy than just having a big salary. I mean, it can help, but if you don't know how to use your money, or if you don't have the right mindset, or if you don't know how to pay yourself, or if you don't have the right patience, then it doesn't really mean anything. It's all about what's in here before you make the money. If you actually want to become wealthy, there are 5 things you need to do.